Greetings. I'm Gar Lippincott, Managing Partner of Atlantic American Partners based in Tampa, Florida. Atlantic American Partners is part of a 50-year-old investment bank and private equity fund manager that's been involved in the EB-5 program for the past 15 years. To date, we have successfully completed 39 EB-5 investments. In addition, we've recently closed another 2 projects for our current fund, the Atlantic American Fortune Fund 4. Over the past 12 years, we've invested approximately $650 million in ground-up development projects. But what sets us apart from everyone else in the industry is that we operate a unique, diversified fund model for our EB-5 investors. This means that although our investors are tied to a single project for job creation and allocation purposes, the return on investment and the return of capital are derived from the overall portfolio, much like a mutual fund. This diversification significantly reduces the risk of losing money and safeguards the EB-5 investors' capital. We take great pride in the fact that none of our investors have ever lost money through our 12 funds. Additionally, we have a 100% success rate for project approvals for our I-526s and I-829s, ensuring that our investors receive their green cards. We at Atlantic American Partners are extremely proud of this track record and committed to maintaining it. Our current investment focus is on multifamily, student housing, and hospitality projects, as these 3 categories underwrite the best for EB-5 right now. We have extensive experience in these areas with 14 multifamily projects that total 3,900 apartment units and 12 student housing projects that comprise 6,700 beds. We have also successfully invested in 9 hotel projects. One of the reasons that we're particularly interested in multifamily right now is due to changing U.S. demographics. We are based in Florida, which has been attracting a lot of people due to the state's favorable weather and lack of a state income tax. Before the COVID pandemic, about 1,000 people per day were moving to Florida from other parts of the country. Since the pandemic, that number has increased to around 1,500 people per day. And this influx of people has created a high demand for housing, resulting in a shortage of apartment projects and single-family homes. In addition, single-family homes have become less affordable in the past 18 months due to the Federal Reserve's decision to combat inflation by significantly raising interest rates. This has led to a doubling of mortgage rates, which has caused people to delay purchasing single-family homes and remain in apartments longer. We don't get involved with the day-to-day decision-making, such as picking out the color of the carpet. Rather, we have control over the major decisions that could impact the value of the asset or the immigration status of our investors. For instance, during the construction process, we receive a monthly draw package that our portfolio manager will review, compare to the budget, and then approve. And once the draw is approved, it is sent to the bank for their review and then ultimately payment. This level of control and oversight is important. After the asset is placed in operation, we receive monthly financial statements that our portfolio manager reviews to ensure that the asset is performing in line with our expectations. Our 5-person accounting team prepares quarterly financial statements that we share with our investors, along with quarterly newsletters and an annual report that is audited by a third-party CPA firm. Transparency with our investors is very important to us. As a private equity real estate fund manager, our focus is on managing EB-5 funds dedicated to making sure our investors meet the unique requirements of the U.S. Investor Visa Program. We're not a developer, as we think that represents a conflict of interest between the developer and the EB-5 investors. Rather, we operate as an asset manager for our investors. We have an underwriting team that evaluates about 300 deals a year, and from this deal flow, we select and close about 1 deal a quarter. So we invest in just the top 1% of the many deals we review. It's important to note that we invest primarily in equity. which again is another aspect of our model that sets us apart from other EB-5 operators who would typically invest as mezzanine debt in a project. With mezzanine debt, the EB-5 promoters will tell the EB-5 investors that they're secure because they have a second lien on the asset. But in reality, if something goes wrong, the mezzanine lender is not at the table with the developer and the bank trying to fix the problem. And the solution that the bank and developer typically come up with is a fix at the expense of the EB-5 mezzanine lenders. By investing in equity, we obtain 50% of the seats on the board of directors, which provides us with a level of control. If something goes wrong, we want to be sitting at the table helping to craft a solution that protects our EB-5 investors. EB-5 investors want to make sure they get their money back after obtaining their green card. With our equity model, there's an operating agreement between the fund and the developer. This agreement generally provides the developer a certain time frame to build, stabilize, and sell the project. This time frame is typically 4 to 5 years depending on the type of asset. If the developer has not managed to figure out how to return our capital during this period, then through our operating agreement with the developer, we have a contractual right to take control of the asset and arrange for a sale of the project. So we have a contractual methodology to ensure we return capital to our investors. Finally, it's important to understand how the EB-5 people you invest with make money. With the loan model, the EB-5 sponsor makes money on the spread between what they charge the developer and what they pay on the loan to investors. Once they repay the loan, they stop making money. So their incentive is to keep the loan out as long as possible. And we believe this represents a conflict of interest between the EB-5 investors and the EB-5 loan sponsors. With our equity model, we make our money at the end when the fund realizes a capital gain. However, we don't have a capital gain until we sell all the assets and return capital to our limited partners. So our incentive is to profitably liquidate all of the assets in the fund as soon as possible, which aligns our interests with those of our EB-5 investors. We've spent many years perfecting what we believe is the best model for EB-5 investors, and we thank you for taking the time to listen to our presentation.